Hi everybody and welcome to Ascentis TV. My name is John Oddy. You'll have noticed that my usual partners in crime, Mark Overend and Oli Krishnan, are missing because if they've got any sense on this lovely bank holiday Monday, they'll be enjoying the sunshine. On this month's show, we've got a fantastic interview with Starling Bank. Mark Overend will be doing tax tips as usual, along with a quick tip. Oli Krishnan will be doing admin min, and this time on Back to Basics, we're going to look at the tricky one that is the cash flow. But let's get on with this video that I shot with Oli Krishnan from Starling Bank earlier this week. Okay, I'm delighted to be joined this morning by Oli Krishnan from Starling Bank. Hi Oli, how are you doing?
Hey John, yeah, very well, thanks. Thanks for having me.
Oh, you're very welcome. First of all, tell us a little bit about yourself.
Yeah, sure. So my background is I've been with the bank for just over 2 years now at Starling. I've been in the industry working with digital banking and supporting SMEs for around 5 years now. And day to day, I work closely with hundreds of accountants throughout the UK to help support their clients with business banking needs.
Okay, fantastic. Starling Bank, tell us all about it. When did it start? Who started it? Why?
Sure. So Starling was founded back in 2014 by an industry leader banker, being Anne Bowden, who's our founder and CEO. And Anne really recognised how technology could transform the way people were going to be managing their money and servicing customers in the way that traditional banks hadn't been. So took the bold step to set up and start a bank in 2014.
She had a banking history herself? Anne had a banking history herself?
Yes, Anne had worked in banking at a sort of chief executive, sort of an executive level position for sort of around 20 years in the industry, starting her career in Lloyd's. And after that, you know, her most recent role before Starling was COO of Allied Irish Bank, but really wanted to take the pledge to ultimately build a banking proposition from scratch, which was technology led. And that sort of allowed us to grow very quickly in terms of our offering. We got our banking license in 2016. With the FCA and PRA, and then went to market with a current account proposition for personal customers in 2017. And since then, we're very fortunate that we've been voted the best British bank 3 years in a row, and also topped the Which accreditations as well for customer satisfaction. But happy to go into a bit more detail with you as well. But sort of the high level summary is that we have over 2 million customer accounts now. We've supported over 2 billion in customer lending. A lot of that through the government schemes over the last sort of 12 to 15 months, and have over 6 billion in customer deposits. And we've become very quickly a bank of choice for a lot of new customers from a personal level, but also businesses in the UK.
Tell me about the main features that Starling Bank has.
Yeah, sure. I know, some of the main ones for Starling is that, we can open an account significantly quicker than a traditional bank. So I think the first point for us is the starting point being the online and in-app application with Starling is 5 or 10 minutes that you can do from the comfort of your own home or office, or both for many people now. And it's the slickness of being able to efficiently set up an application, apply in 5 or 10 minutes, and the application is split into two halves. One is, who are you as an individual, know your customer, and the other half of sort of 5 to 10 minutes is let's understand a bit more about your business from a KYB perspective. We're also, from a value point, very competitive in the UK because we don't offer a monthly fee or annual charge, and that's an indefinite proposition for our business banking customers. The only real itemised fee for using Starling is the post office being our branch network for depositing cash, as we're a completely digital bank. So we feel that our actual offering is very competitive in comparison to other providers, whether they're another neo sort of challenger in the UK or an existing high street bank. Many of those providers will come with maybe a free monthly, sort of incentivized period, but after that there'll be a lot of itemized fees. So we think from a fair value proposition to the end client, we're very, very fair and very competitive in the UK. We're also fully integrated with leading accounting software, so the likes of Xero, QuickBooks and Free Agent. And I think one of the big differentiators from us to some of the legacy banks is that we offer a real-time transactional feed, which is really valuable not only to the end accounting partners we work with, but obviously the end customer, because they're then being able to reconcile and keep up to date with their transactional data in real time, opposed to previous working day pools or Friday's transaction shown on Monday. So it's being able to have your data at your fingertips, so you can stay on top of your cash flow, more importantly. We also offer spending insights and real-time spend notifications, which has become really popular with our offerings. So anyone that's a customer of Starling, whether you're personal, joint or business customers, or using our multi-currency account, you get a real-time spend notification. So if I was to send a payment to you today or vice versa, you'd be notified, your balance would update in real time. And we basically we auto categorize those transactions into expenses as well. And that allows our business customers to get a bigger picture of where they're spending their money. And the analytics tool and the insights gives you an idea in terms of where your costs are going for a business, and being able to spend that. The final one, without going into our features too much, is I think the really popular one has been our spaces section. I love that.
I've used that myself.
Yeah, a lot of our customers refer to it as business goals. It's available for personal and joint customers as well. And for business customers, you can use that for your VAT and tax management, or it could be used towards a team night out, a new piece of equipment. But it's a really nice way to segregate your actual transactional banking to segregated fund where you can.
The same account, isn't it? It just hives off an amount of money and shows separately. We do the same with our tax savings for the practice here.
Exactly, yeah. And there's a lot of partners that we work with, and also customers that are becoming familiar with profit first models, and being able to set aside your corporation tax or VAT with that coming around quarterly, and being able to stay on top of that. And what you can do is also round up towards your goals and set up recurring payments. And it's just a nice way to actually tailor it as well. You can put a picture behind it, and also actually set a target amount. So every time you spend with Starling, you can actually put towards that. And I suppose from a personal level, whether that's home improvements or the next
holidays, whatever,
anything that you're interested in, it's a nice way to make that visually personal, and you can see that in your actual banking as well. So I suppose we're very feature focused with our banking offerings.
Yeah, I can certainly echo what you said about the ease of opening an account. I already had a business account, and I think it took me less than 2 minutes to actually open a personal account.
Yeah.
And my debit card arrived about 3 days later in the post.
Yeah.
So who makes an ideal customer for Starling Bank?
Sure. So I would say, it's an SME banking proposition for business customers. I think where we solve most problems and are probably best positioned in our journey at the moment, being the fact that we started offering our accounts in 2018, we're continually offering more and more developments. But for us, I would say really any startup, small business, sole trader, contractor, freelancer, or an established SME, but probably more, sort of between, the £0 to £5 million turnover mark is probably where we're best placed. That's not to say we can't support a business with a 10 or 20 million pound turnover, but we generally find as the businesses continue to grow and have maybe quite complex requirements, we're still building some sets of products and features that I think will be better placed for those sort of higher turnover and maybe faster growing businesses beyond the audit threshold, sort of in the next 12 to 18 months. So yeah, very much more of the S and a little bit of the M of SME is probably where we're best suited at the moment.
Oli, when I've talked to potential customers about joining Starling, there's some nervousness around it being a digital bank and having no high street presence. How would you respond to that?
Sure. Well, the one thing I'd like to put in terms of adding confidence to customers that are considering digital banking is that the most important aspect of that is that we are a bank. We're a licensed bank in the same way as a legacy bank that has a high street presence. And I'd also like to add the fact that we are actually on the high street, but through the strategic partnerships that we have in place with the post office, which is our branch network and acts as our branch network. And we're actually finding that that's becoming a more popular choice for a lot of local towns and communities in terms of how they'll carry out their cash deposit banking. And we're very proud to be partnered with the post office. You've got access to over 11,500 branches in the UK, and that's all in real time. So if anyone was to deposit cash at Starling, you get a real time notification into that cash entering your account as you would like a local branch visit. We also accept check payments as well, so you can either send that through to us at a free post. And again, it's not obviously becoming a popular payment option now with access to things like faster payments. But if a customer wants to still deposit a check with Starling, we actually have a check scan and upload facility up to the value of £500, and anything above that we have a free post service. But yeah, it's letting you know that security is fundamentally at the forefront of what we take really importantly. We have industry leading security functionality, and all of the funds are protected in the same way with the financial services compensation scheme.
What about speaking to somebody, Ollie? If I want to talk to, I want some support, I've got a question to ask, I can't go into a branch.
Yeah. So we've got a number of different ways. We offer 24/7 customer support, 365 days a year. And there's 4 or 5 key ways that customers can actually reach out to us. There's the live in-app chat, which is probably the quickest way that customers can get in contact.
I've used it, it's very good.
Yeah, so you can go straight into the app and start a conversation. As a bank, we employ real people, which is obviously a really important part of that aspect in servicing customer needs. There's also an online help centre, and that's actually a really good functionality where you can type in your question, and based on the algorithms, it will pre-populate that with the recommended answer to what question you've put in, which is becoming a very popular choice. There, of course, is our customer support telephone number, an email line, and also a really extensive FAQs page on our website. And I think just to touch back on the perception of digital banking, I think the growth of Starling, but also other neobanks, it's played a significant role in changing perceptions in terms of how many customers are currently part of Starling. It's the reason why we've become the first mobile bank to become profitable. We voted the best British bank 3 years in a row, and we're actually seeing the highest voluntary account switches out of all the banks because of the technology is sort of at the centre of what we do. And I think the prominent proof of that principle for digital banks is it's been a result of the global health crisis. We've been living through that over the last year, and I think COVID-19 has accelerated the rate of change, not only in banking but in so many other sectors by 15 or 20 years. So people that previously would have gone into a branch and carried out their banking in that way, that's consistently evolving in the industry, and more people are now the primary way that they'll carry out their banking is going to be app-based, and that's where we think that we're a leader in what we do.
Ollie, I think we're just about up to time there, so it just remains for me to say thank you very much for joining us, and I hope you'll come back and give us an update in future.
Yeah, of course. Thanks for having me, John, and great to be part of the session today.
Welcome. Bye for now. Thanks for that, Oli. Oli Krishnan is the Accountancy Partnership Manager at Starling Bank. And Starling Bank are one of about half a dozen fairly well-known what are called neobanks now. Banks that were started from the very beginning to be digital cloud-based banks. So if you've got that kind of accounting system in place, and all of our clients do, they're all on Xero, Starling makes a fantastic pairing for that. Certainly offers a unique set of benefits compared to the usual high street Goliaths that we're all used to. If you'd like to apply to Starling Bank, then you can do that through our website as well. We've got a dedicated page as Starling Partners. As I say, there are about half a dozen of them, but reputationally and for us from personal experience, Starling is definitely the best. Okay, so next on the show, we're going to look at Back to Basics. It's part 3 of Back to Basics, and it's the cash flow statement. For non-accountants, and even some accountants actually, the most difficult statement in a set of financial accounts to understand. And for that reason, I'm going to break it down into 2 sittings. We're going to, first of all, look at the difference between capital and revenue expenditure, and next time we'll tie it all together by actually producing the cash flow statement. Hello everybody, and welcome to Back to Basics. It's episode 3, and this time it's the cash flow statement. And for those of you that watched episodes 1 and 2 with the profit and loss account and balance sheet and found those to be rather simple, they were deliberately so, and you'll see why later. Because the cash flow statement is going to represent much more of a challenge to you. I'm actually going to break the presentation of this down into 2 episodes. Episode 1 will be an explanation, and episode 2 will be the preparation of the statement itself. So first of all, let's get some terminology out of the way, because the term cash flow suggests to a non-accountant that is a projection of income and expenditure into the future. They often refer to them as their cash flows. To an accountant, it means the reconciliation between the profit and the movement in the bank account. Taking our example in episode 1 of where I use somebody's payslip to walk you through a profit and loss account, that person, when they got the payslip after the deductions, would naturally assume that the net pay would appear in the bank account at the end of the month. It's not the same with the profit in a business appearing in the bank account at the end of the month. In my example here, £750,000 profit does not appear in the bank at the end of the month. My example here, I've moved by £520,000. So why is it different? It's different for two principal reasons. That is because of the nature of the expenditure and on the timing of the expenditure. On the timing of the expenditure, let's just jump back to the profit and loss account for a moment. The timing of the expenditure, income and expenditure appears in a profit and loss account when it's incurred, not when it's paid for. Let's frame that with a couple of examples, shall we? If I had £50,000 worth of sales of cans of beans on the 25th of March, and I give my customer trade credit, say 30 days, it occurs in March, therefore it's included in sales in March, and it's included in the bottom line profits in March, but it's not in my bank account. Actually, it's in debtors, in trade debtors. Conversely, if I had bought some cans in March, say on the 15th of March, I bought £10,000 worth of cans. It's included in my cost of sales, therefore it's reduced my profit. But I've not paid for it out of my bank account yet. Actually, it's included in trade creditors. So that deals with the timing of expenditure. Now let's deal with the nature of expenditure, because transactions don't just appear in the profit and loss account, they appear in the balance sheet as well. Transactions in the profit and loss account are known as revenue transactions, whereas transactions in the balance sheet are known as capital transactions. And very broadly speaking, the difference between the two is to whether they have an enduring benefit to the trade, their capital expenditure, or whether they relate to the normal ongoing trading or revenue, if you like, revenue income of the business. So sales, cost of sales, heat, light, rent, rates, insurance, they're all everyday ordinary expenses that are incurred on the profit and loss account. They relate to the trading of the business. Transactions that are of a capital nature have an enduring benefit to the trade. They last for much more than 1 year and they don't relate to the normal trading. Let's frame that with a couple of examples. If I pay my rent in March, that naturally relates to the trading in March and it should be expensed through the profit and loss account. It should be reflected against the income in that particular month as well. It's a revenue expense. And other examples, I've said before, heat, light, rent, rates, insurance, that kind of thing. However, if I purchased a new canning machine, that has an enduring benefit for the trade. It doesn't relate to much. It relates for many years. Therefore, it will be added to the balance sheet. Other examples of capital transactions on the balance sheet might be in terms of expenditure would be the repayment of loans, and on income might be the issue of new shared capital. So there's an awful lot of transactions on the balance sheet that don't appear in the profit and loss account, and therefore your profit and loss account movement in any period is never going to agree to the movement in the bank account. It's quite often why you get the mischievous press reporting, for example, that a company's made millions of pounds an hour. What they fail to point out is that company is probably investing hundreds of thousands of pounds an hour, if not more, on the balance sheet. Conversely, for new business startups that are losing millions of pounds, but they've still got money in the bank, therefore they've got income, that income is capital income. It's been injected into the business and it'll appear on the balance sheet. So how do we reconcile in an exact way the movement on the profit and loss account to the movement in the bank account and understand the timing of income and expenditure and the nature of income and expenditure as well? That's done in the cash flow statement. And that's what we'll be looking at next time. So in my example here, I've got a £750,000 profit and I've got £520,000 movement in the bank. So where did the rest of the money go? We'll take a look at it next time. See you then. Okay, so in comparison to the profit and loss account and the balance sheet that we did in the last couple of months, you can see that the cash flow statement is a lot trickier. We'll tie it all together next time when we actually do the statement, and those explanations that I've just given there should make much more sense. Okay, now it's time for tax tips with Mark Overend, and he's going to tell us about R&D.
Okay, so this month's tax planning section focuses on R&D tax relief. First of all, what is R&D tax relief? Well, it's a relief against corporation tax. So it only applies to limited companies. It doesn't apply to unincorporated partnerships, LLPs, or sole traders. And being a corporation tax relief, it offers the opportunity for any qualifying costs to be enhanced by 230% for corporation tax purposes. That means that if you spent £100,000 on qualifying R&D activities, then in your corporation tax return, you would be showing as having spent £230,000. Now, obviously, that's going to make a pretty significant change to your profit subject to corporation tax if you've got such qualifying activities, and have a huge reduction in your potential reduction in your corporation tax bill. Indeed, it has such a big impact that perhaps not just reducing your corporation tax bill, it may wipe it out completely, or even turn your profitable company into a loss-making one for corporation tax purposes. It's just worth noting that it doesn't affect your statutory accounts. If you do make a loss for corporation tax purposes as a consequence of making R&D relief, then you have a couple of options. One is to offset that loss against another accounting period, so potentially carry the loss back against prior profitable years, or indeed carry it forwards against future years if you envisage returning to being a profitable company in the future. If you're a company in startup mode, or indeed you simply want the cash in order to accelerate your business cash flow forwards and things going forwards, then you can surrender the loss for a repayable tax credit. Now, the surrenderable loss pays a 14.5% tax credit back to you, so it's slightly less favourable than surrendering for corporation tax relief, which at the moment would give you 19% in terms of a payback. But if it's cash is king in any business, and if your business needs the cash, then that is a very generous offer. So the next question, of course, is who qualifies for R&D relief? Now, to quote Hmrc Guidance, first of all, your company must be attempting to resolve scientific or technological uncertainties. And what does that mean? I hear you ask. So I suppose, first of all, there's no restriction on any industry sector. I suppose when we talk about R&D, people immediately think of people in white coats in laboratories making scientific discoveries, perhaps looking for a COVID vaccine most recently, but it doesn't have to be anything created in a science lab. You could be looking at developing a new project, a new product that's innovative in the way it's designed, the way it works. You could be taking an existing product. You could be making it lighter. You could be making it smaller. You could be making it faster. Any of these things where essentially you look at the proposition on the table, someone's had an idea, and the rest of the people around the table think, not really sure that's going to be possible. If that's the reaction, then the development work that goes in afterwards, perhaps you take a feasibility study, start with some initial drawings, some initial thoughts on what you're going to do, and then really work through whether the concept is actually going to work and actually put it into practice, then that is likely to qualify for R&D purposes and qualify for R&D tax relief. There can, of course, once you've gone through all this, you've gone through the uncertainty, created a product, it works, brilliant, everybody's happy. Often there is ongoing development of such products after that. If there isn't any uncertainty around that ongoing development, that aspect won't qualify for R&D relief. And I mention that because often people will create a new product, they've overcome the uncertainty, but they'll get customer feedback in terms of how they can develop the product further. That might be in terms of aesthetics, design around, how things look or how things feel. But if the technology required to achieve the changes isn't new technology, then it's likely that those aspects will fall outside of R&D relief. So it is an area where you need to be careful what you include as well as what you don't include in terms of putting a claim together. The mechanics of putting an R&D claim together are identifying what we like to call projects. So in a project, the initial uncertainty will be your first project, the project to overcome the uncertainty, to decide whether the product you're going to put to market perhaps is feasible. It's an area we could talk on endlessly, really, for many, far longer than we have available here. So if you've got any other questions, please do get in touch and we can talk in much greater detail about perhaps R&D projects that you're looking to undertake. Okay, this month's quick tip is about subletting offices and VAT. Aware that many businesses might be considering subletting all or part of their offices due to the impact of COVID. You might have moved to a position where you now got your teams working exclusively from home, and perhaps you're going to stay like that, or perhaps you're just going to have a phased return where only a small part of your team return to the office. And it therefore makes sense to sublet the rest of the office space to somebody else. VAT is an often overlooked area when considering subletting your offices. The starting point is that even if you are a VAT registered business, and even if you are being charged VAT by your current landlord, your charge of rent to your sublessee will be exempt from VAT unless you do something about it. Now, you can opt to tax the building yourself, and that will be a separate option to tax to your landlord's option. And if you do that, then you will charge VAT on the rents that you charge to your new tenants. I suppose the little concern there is if you happen to have a tenant who isn't VAT registered, then of course it's going to increase the costs of the rent by 20%. And so you might think, actually, I won't bother opting to tax and charging VAT. I'll just leave my rents as VAT exempt and I won't worry about it. Now, that is the big concern there, is that if you have exempt sales in your VAT calculations, it can impact your ability to recover VAT on all of your overheads. So perhaps a small sublet when you've got a fairly large operation, this won't be much of an impact. But if you already have exempt sales in the arena that you operate, and this adds to your exempt sales, you may drop yourself into what's called the partial exemption for VAT, which prevents you from recovering VAT on all of your overheads, as I mentioned. So very much the tip this month is, if you are going to sublet your office, then do consider the impact of VAT on your wider business operations. And if any doubt, get in touch with us. We can help you do the calculations needed to decide whether you should charge VAT on your rents or not.
Okay, so as you can see, really important, if you are one of the vast majority of businesses that is changing culturally how they use their workspaces, and maybe you just don't need that space anymore, you're going to sublet it out, make sure you take proper advice. Lots of pitfalls that can be easily avoided. Okay, it's time for Admin Min with Lee.
Okay, in this episode of Admin Min, we have payroll. The P60s, the deadline for that was the 31st of May, so that should hopefully be with all your staff by now. I've just left that on as a final reminder. Don't forget, we've still got the CGRS claim period, so that's always 14 days after the month end. So we're talking about May's being filed on the 14th of June. Company's House, last of this scenario really, so June 20 and September 20 both need filing by June 2021. October 20s are due July 21 and back to normal really from there, although you can still apply for an extension, but it's an individual basis. VAT, last chance saloon for the 30th of April period ends. They need filing by the 7th of June. Same applies for the partial exemption annual adjustment. Possibly the last chance to remind you of the VAT deferment. So this was for the VAT arrears from kind of March 2020. The application for that, you need your own government gateway and you need to get that in by the 21st of June. Corporation tax pretty standard, so September year ends are due for payment on the 1st of July. And in other areas, we've got this business rates. So the 100% relief ends at the 30th of June. That's going to be replaced by a 66% reduction, which effectively means you're going to be paying a 30-year rates bills from the 1st of July. And a little bit of advanced warning, really, that the second payment on account for personal tax is due on the 31st of July. In Ascentis news, save the date. On the 24th of June, we've got a fantastic webinar coming out. John and Andrew are going to take us through how to avoid recruiting the wrong people. Somehow going to link Dolly Parton and Donkey from Shrek. So it's a fantastic watch and a must watch for all our viewers.
Okay guys, that's the end of the show. Thank you very much for joining us. Subscribe, hit the bell, all that kind of stuff if you've enjoyed it, and we look forward to seeing you next time.